Good evening and welcome to tonight's member webinar where we look at ASX investment opportunities in review for the 28th of October. The information covered this evening is general advice only. If you'd like to know more about our products, please visit our website or give me a call on 1300 614 002. Starting with a graph of the indexes, and then we'll jump into what's gone on the blog. So just starting with the Nasdaq, moving through these fairly quickly. So the index continues to push higher. The support levels there just sort of maintain this position that the momentum's positive, but we're under red arrow, but we don't really have that rollover into a negative setup there for the short side of the index. If we look at the S&P 500, just updating that from Friday night, you'd probably really sort of start looking at this through that type of lens there. The setup's a little more bearish. We're under the moving average. We've got the red arrow, so a little bit of overhead resistance there. If we have a look at the domestic market, so we've got the overhead resistance there below the moving average, but if we jump back to sort of where that strength is, it's still sitting in these tech stocks, so may even just sort of tighten that up a little bit further there for the Nasdaq. S&P and the XJO below the moving average under red arrow. We know that a lot of the market is not sort of going through that algorithm buy transition at the moment. We've got a few stocks that are selling off, and a couple are kind of increasing on the radar, but we haven't yet kind of transitioned, all the way through to the sell-off into algorithm buy signals. At an index level, we haven't set up short positions on the index yet. But mindful there that the conditions are kind of in place there on the S&P 500 now, and to some extent they're on the XJO as well. Let's have a look at the positions that we are running. So this global agriculture ETF, been buying that, so building the position size in that. The crude oil ETF, we're still really just playing this through Woodside and Santos as our main two exposures. This is the BetaShare crude oil ETF. I think just keep an eye on it off around that $5.10 level there. Look for the price action to cross above the moving average. GPT, we hold this in our property trust. We're somewhat sort of positive on this because of their increasing exposure to logistics, but obviously part of the older sort of portfolio allocations into some of the commercial office side of it's obviously a little bit slow, so I don't think it's a high growth opportunity, but just highlighting the switch there from sell conditions into algorithm buy. PEXA, so take a look at this. The range that I've highlighted here is 13 to 1380. I think you could start to have a think about an opportunity there. Tonight in the US, maybe Forward and Waste Management, but really the big ones are tomorrow night, having a look at Alphabet and AMD. Microsoft on Wednesday night, and Meta. Obviously, they're going to be important results. Apple and Amazon. So this is the key week where you start to see these earnings from the large tech companies. It's interesting that we come into this week with the S&P below the moving average, but the Nasdaq above. Maybe the final sort of trigger there for sort of being on the short side of the index would be if we saw any sort of selling pressure in these big tech names following the results, which really kind of Tuesday night's the night. Merck in the US, the correction here from sort of 130 down to 100. I've created a fairly wide range there from roughly say 95 up to 105. I think that's your buy range there. The US healthcare providers ETF, this is corrected from about $60 down to 52. I think your entry levels maybe at 51, somewhere in that order. Zscaler still bullish on parts of cybersecurity story. Roblox Corporation just comes onto the watch list from the switch from sell condition to algorithm buy. Like to do a bit more study there on the fundamentals. Lamb, the correction here from 110 down to sort of 75 puts it back in a buy range. Moving back through the articles, AMP really breaking out. We had better earnings results that were just announced, and they've been talking about sort of the multi-year recovery story here in AMP. Off the back of the better earnings results, the stock's now pulled back. So being a buyer of it within that price gap there of say $1.35 up to $1.45, that becomes your buy range there. Mineral resources, the strategy here is really just to say, keep an eye on the moving average, wait for the momentum to turn. But the reaction that we're seeing in the market to the news around the CEO is probably not a company changing event, and ultimately kind of being a buyer of it on the weakness is something that you want to continue watching for. Coles, not a lot of way of upside in Coles and Woolworths, but reasonable income contributors to portfolios. We'll finish tonight with a look at the ASX 200 trade table, and we're seeing these positions reduced at the moment. Healthcare providers already covered that, and there we are back to the webinar. So with that, I'll just jump into the trade table this evening and finish off on this point. So we've seen it reduced down to only two positions. If we have a look at the closed trades here, it's done very well. Those closed trades are obviously what's fed through to the tick up in the performance there. So from being up 40% to being up 52%. And we're now just starting to see things taper off a little at the same time as we're seeing the positions reduced. So the only two open trades at the moment are Commonwealth and REA. Not under red arrow yet for Commonwealth, but we may find that momentum rolls over and the algorithm sells that. REA, certainly the conditions here look like they're pretty close under red arrow and move below that average there, and that'll be closed out. And it's been a reasonable gain, REA, but has been in there longer than normal, like we've looked at over the last few weeks. Kind of a fairly long duration hold time in this strategy is about 40 days, so REA is double that. Commonwealth's kind of just sort of in the sweet spot there. But yeah, the performance continues to do very well there. And just having a quick look at the US, we're not seeing a big build up in positions here either. We've seen a number of the open positions all closed out. That's fed through to a tick up in performance, but just not quite as strong as the ASX 200. Over the coming days, focus on the opportunities that are on the advisory blog. If we're looking at the model portfolios, we haven't, and let's go to the top 200. So, Waypoint's a little bit outside of sort of the stocks that I focus on. GPT covered off on that. TPG Telecom, look, it's not an exciting business, but it is possibly getting a bit oversold, so you could sort of keep that one on your watch list. So they're sort of the three most recent additions. Otherwise, we're getting into stocks that we've looked at previously. Transurban, quite like. We've added that into portfolios. CSL, don't mind that, of course. Gold Roads, probably at around $2 at a level that you could think about taking profit in. And most of that we've already covered. Certainly the main focus would be to keep an eye on the strategies on the advisory blog, and obviously make sure when you're tracking the trade table you've got the notifications on, just to be alerted to any new additions that do drop in. But it kind of feels like we may be at a level where the market starts to roll over a little, and we're yet to see that kind of build up in new algorithm buy signals. Thank you for listening in. I look forward to speaking again next week.